Have you seen the prices on these brand new vehicles? Brand new trucks from $80, $90, $100,000 and even more. I've seen trucks as much as 200 grand, as well as SUVs, Jeeps, for example. We talk about some of the Wagoneers that are over $130,000, $140,000, Wranglers out of control.
Base model Jeep, this is the cheapest you can get for a current Wrangler.
And even cars are way too cost prohibitive for a lot of buyers to afford. But during the last couple of years, banks were pretty quick to start doling out money to buyers, even subprime lenders, to get their exciting new vehicle. Things have changed, banks have run out of money, and buyers can't pay for these overpriced cars and trucks. During this last feeding frenzy in the last couple of years, people were able to, even with subprime lending and credit scores, they were able to walk into the banks, the lenders, and get the money that they needed to buy their brand new SUV or truck or car. But things have changed a little bit, and a lot of these banks are literally tightening up their belts. They're becoming a lot more critical as to who they actually lend money to, and a lot of buyers aren't able to buy their overpriced vehicles anymore. There's no secret. MSRPs have been on the climb for the last few years. It's gotten literally out of control. And sure, while there's recent incentives of $1,000 or $2,000 off or 0% on 3 years borrowing, the fact remains is after 30 or 40% increases on the base price of MSRPs in the last 2 or 3 years, we're seeing a position where a lot of people they just can't reach or attain that vehicle status anymore. They have to consider buying an older used junker or maybe start taking the bus. Have I mentioned in other videos, we've seen that delinquencies are on the rise, repossessions are on the rise, and banks are starting to panic. They don't want to be upside down. A lot of people are literally upside down on their loans, and they're having to make monthly payments on a vehicle that they owe more to the bank than the vehicle's worth today due to depreciation and the fact that we've seen this shift in the market. So according to DealerTrack, a Cox Automotive service that tracks credit availability based on factors, for example, like loan approvals, terms, and down payments. They're clearly pointing out that people are in a position where they can't afford to pay for these new vehicles. And the banks are getting a lot more nervous because of the cost of inflation coupled with the fact that people are making less money. As a result, the typical lenders, for example, credit unions, banks, and even some of the dealership options are starting to wave bye-bye to people that aren't exactly extreme in terms of the credit options, or they don't have the best credit scores. If you're even sort of riding the line of subprime, you may not even have an option to buy that new pickup truck or SUV. According to Sean Tucker, a senior editor over at Kelley Blue Book, which is Cox car research and sales website, claims we are seeing credit access tighten on all channels. And the real impacts are those people that are in the subprime category, and the main reason for that is the banks don't want to take a risk anymore. As a matter of fact, the percentage of subprime brand new car loans went down to about 6%, which is approximately half of what it was back in 2019. Clearly an indication that the banks are getting nervous, and after this feeding frenzy, it's time to get back to brass tacks. And honestly, banks are taking less of a risk. As a matter of fact, they're raising the threshold. Now you're actually seeing their preferential treatments going to prime borrowers, for example, like credit scores of 743, which has come up from 739 being the average prime lending borrower from simply a year before. Clearly it's averaging up, and the banks are showing a preference to just giving the money out to people that they believe that they can trust. Even for used cars, we've seen the average loan credit scores rise from about 681 up to about 684. So there's a slight increase there as well, showing again that we're averaging up and the banks are lowering their risk tolerance. And also, according to the Federal Reserve Bank of New York's February report on household debt and credit in the fourth quarter of 2023, people are just grossly becoming delinquent and their credit cards are overloading. People are maxed out, they can barely afford to eat, they're barely affording rent, and now with car payments, they're struggling even further. People are taking on mass amounts of debt at an alarming rate. And according to William Vanderklau, an economic research advisor at the New York Fed, said this signals increased financial stress, especially amongst younger buyers and lower income levels. Now, if you look at statistics, delinquency and overall credit debt actually dropped down slightly in 2020 to 2021, where we saw a downtick. But a lot of that has to do with a lot of the stimulus packages and the government were throwing money out left, right, and center. Things have changed, and now the government, American, Canadian governments, are looking for some of that money back, and those loans are expiring. Now people are in a real situation. And now, of course, we're finding if people were trying to buy a car during 2022 or 2023, now with the highest interest rates, those people are having much more problems making their payments. And yes, these interest rates are a direct result of Federal Reserve's benchmark rate, which was essentially a campaign to slash down and manage high inflation. But again, it's all false because high inflation came as a result of stimulus packages. People were then buying cars, houses, quads, SUVs, pickup trucks, and all of that. But that gave some false signals and triggers. And now, unfortunately, the Reserve or even the Bank of Canada have triggered interest rates to go higher, and they're not retracting them in any way. So people are stuck paying high MSRP tags as well as high interest rates on their brand new vehicles, cars and trucks with no end in sight. And clearly car prices have gone up, monthly payments have also gone up. We went from the end of 2023 being about $738 per month all the way up from a year before at only $720 a month. And used car loans went from $530 to $532. So we're seeing incremental increases in the amount of car loans that people are taking on and the debt. But that's just saddled on the backs of all the other inflation, increase in rent, loan mortgages, credit card, food costs, fuel costs, carbon taxes, and additional foreign investment for money being drawn out of the country for other initiatives. But now statistically, some people are actually kind of listening because we're seeing around 2020, the average down payment for a car was about 10%. And now since then, it's risen up to over 15% because some people are trying to get ahead of that. And it also is indication some of that stimulus money went directly into down deposits or down payments to pay for that new vehicle. So they had a little bit more expendable cash for a short period of time. And so for people shopping for a brand new vehicle, the average car manufacturer likes to maintain about a 60-day supply on their car lots, but they're over 80 days for a lot of the average manufacturers. And with some brands like the Jeep, Stellantis, Ram, Chrysler products, that stuff is actually on the lot as much as 130, 140, 160 days. Way out of control. They have way too much inventory and they can't sell their products, even with some big incentives. Sadly, used car shoppers are in a bit of a pickle. They're not seeing incentives. And even though used car prices have somewhat stabilized, they haven't really dove off the cliff yet, and people are still paying top dollar for a good quality late model used vehicle. And so the bottom line is a lot of people just can't afford to buy a car. The banks don't want to give up the money, and people just can't take that new dream vehicle home with them. Now, there is an argument that actually may be thinking about waiting. And I've said this before, even with some of the small incentives, the interest rates that are starting to come down slightly, at least for the car lending, we know that the base interest rates haven't changed all that much, although there's talk in Canada, United States, of them maybe dropping those interest rates on the next look at it. But currently, we're still maintaining stability and it's level. The reality is though, car manufacturers are getting much more pushy and they're blending some of those costs in the sale of their new vehicle, and they're willing to offer up, in some cases, 0% for 3 years, 0% for 4 years, and I've even seen 0% for 5 years. So the incentives are out there if you need to buy a car, but honestly, there's a lot of people that just can't qualify and they're just not able to get that new car. So I'm in a position where I would suggest waiting till at least midsummer after tax season. You might have an opportunity to get yourself a great deal. So the cycle of devastation and chaos in the automotive industry just continues on. And while there's some people out there sniffing around finding the odd decent deal, the fact remains on an average, there's a lot of inventory, but dealers are in a weird position where they're not giving a lot of that back. They're not heavily incentivizing. Yeah, there's small incentives, but they're not all that motivated yet. They don't seem to be very motivated to push all that much harder, and that leaves a lot of people, especially those in the subprime sector, unable to buy their new car. And with all of that said, if you are shopping for a car and you do have decent credit, a couple of great reviews right there on my other channel, 6-Speed Reviews. You want to see a little bit more about one of those hot, popular, affordable little Kia Seltos SUVs. A lot of people are buying them, as well as a Tesla Model X Plaid. We know the electrified market is hot, up and coming. If you want the fastest car on the planet, that might be your bet. I review both of those. Hope to see each and every one in the next one. We'll see you real soon. Bye-bye.